Everyone, I'm back again with Gabe, aka Foo Hat. Welcome back.
Oh, thank you. It's nice to be back.
And today we're going to talk about Joel Greenblatt and his portfolio, Gotham Asset Management. And Joel Greenblatt is known for some books that are popular for investing, like The Little Book That Beats the Market and The Magic Number. And there's so much resources online about Joel Greenblatt's strategy. So we're going to talk about his investing approach a little bit and also his portfolio. And Gabe, what have you brushed up on lately about Joel Greenblatt?
I brushed up on the active holdings of Gotham Asset Management the through the through the prospectus that they offer through the Gotham Fund's website. What have you brushed up on?
Well, I just looked up because the his investing strategy is supposed to be about combining the return on invested capital and earnings yield of stocks, and then you combine those among a universe of stocks that you survey. So what I remember, I read his book a while ago, and I haven't really put his strategy into practice, but some people have had some interesting results using it. Some are not always working out, but maybe it worked for some years. Hard to say how good of a strategy it is, but basically, if people know out there what return on invested capital is, it's basically trying to figure out your return on investment if you divide the company's um, like earnings over the debt plus the equity. So return on investment or return on equity is just dividing the return over equity. But when you include invested capital, that's the total of debt and equity. So that's one of the factors. And then the other factor is the earnings yield. And earnings yield is just basically flipping the price to earnings ratio. So if you have a price to earnings ratio of 10, then you're basically getting a 10% return. And if you have a price to earnings ratio of 5, you're getting a 20% return, right? Does that math check out?
Yes, definitely.
Okay. So yeah. So if you have that, like in theory, what you're supposed to do is combine those factors. So you want to get companies that have the lowest in this ranking of that combination. So like let's say you have the highest ROIC and the lowest or the highest um, earnings yield. When you combine that, whatever your top ranking is, that is supposed to be what you're maybe supposed to consider for potential investment. So, ideally it would be companies that say have a 20% return on invested capital and have like a P of 5. So if you have a lot of companies like that, then maybe they might be good potential investments of something that might be good to look into. But it doesn't always work out because when we're looking at stock market's performance, that's a historical view, whereas you can't always predict or know how companies are going to perform in the future. So it's sort of like, it could be a helpful starting point, but it's not the full picture of like you should only invest in this Joel Greenblatt ranking strategy. It's only probably one factor out of many that you should consider, right?
Oh yeah, definitely, yeah. Definitely, yes. With considering with the growing wheat grass strategy and with the Magic Formula website, you would have to screen for it properly too. And when I screen it too, you end up finding some value traps too, for what I've
Oh yeah.
seen.
Yeah. So how, I guess, is there any way to kind of account for that? Like, how can you tell the difference between something that's actually a still going viable or growing company compared to like a value trap?
You just have to look at the filings, what I've seen. Like I remember when I did it, GoPro showed up, and that stock has some colorful history of a very colorful individual. And other than that, yeah, that's about it for
Yeah.
being able to screen for that. It's a good screener for generating ideas and stuff like that.
Okay. Yeah. So that's a good helpful starting point. So if you're interested in the high level approach of having a somewhat simple investing screener, it could be interesting as a way to get ideas, like you said.
Definitely.
And tell
Uh,
me more about what's going on in the portfolio.
From what I've seen with the portfolio, they have two ETFs, and if you look at the 13F filing, you're gonna notice that they have bought their own ETF twice. They
Their
bought
own
their own,
ETF?
yeah, yeah, yeah.
Really?
They buy their own ETF.
What's that? What's their ETF called?
Give me 1 second. I will look at it real quick. It should be GLUV, if I was not mistaken.
GVLU maybe?
Yeah, sounds about right.
Okay. All right. So they clearly believe in their own ETF.
Mm. Yeah, they have their own ETF, and then they have the active Madge one too. It should be underneath that other one in the 13 filing too.
And is it so between these two, that's among their over 1,293 holdings or something like that that they seem to be having a bunch of investments in.
Yes, from what I'm seeing from the Whale Wisdom, it contributes about like the top holdings account for about 22% of the portfolio. And of course, it's their ETF, the Gotham Enhanced S&P 500, and then you have the Gotham Value, 1,000 Value ETF.
So have you looked into these ETFs specifically and like deduced anything about them in particular?
He does not like Tesla, from what I've seen. Um, He is bullish some asset managers, but the allocation to asset managers is incredibly small. He's more allocated to tech and more allocated to other of ideas. Like I think he has investors in there too. You end up going through the whole entire market through each sector he's involved in, given the fact that there's so many companies.
Yeah, so it seems a little confusing looking at his portfolio because he just seems to own so much, and it kind of makes me wonder if he's going in and out of a lot of companies all the time. And kind of like I'm not super familiar with his investing strategy. Like I know he strove to make his investing approach so easy that his own kids could do it. So I know that was part of his motivation, and to help people at all skill levels be able to make investing more accessible. But it seems a little hard to understand what he's motivated by looking at a portfolio that owns so much.
Yeah, when you get down to it, the weighting is a bit iffy for each sector because he never overweights in 10%, I've noticed
Mhm.
overall in the portfolio. So each thing will have a significant impact, but some of them will not, given the fact that you have to get over that 5% rule to actually move the needle for what I've seen
Hmm.
when you
Yeah.
get
So
that amounts of sums of money.
hmm yeah. So it seems like maybe it's almost like too diversified, if it seems that way.
Yeah, it is very diversified, but you will find great companies in that prospectus that a lot of people should look into.
So maybe like maybe there's some merit in looking at what he believes are good companies, and even though it's very diversified, like if people agree with all of the choices that they made in that ETF, they are free to invest in some of those if they think that's a good, what the prospectus is putting forward. If it makes sense to you and you like, the potential rewards and the potential risks of it, but then you don't always necessarily have to invest in someone's ETF. Maybe if you see him investing in a few companies that you also like, and you're more of an individual company type investor, then maybe that could give you some ideas and say, oh, Joel Greenblatt and XYZ other investor also invested in this particular company. Maybe they're seeing something there that's impressive. Like I noticed a bunch of super investors recently investing in Stellantis, and I don't know why, but it kind of makes me wonder what is so, what's happening with what used to be Peugeot and Fiat Chrysler. What's going on with that car company that makes some really good investors want to get into it.
Oh, yeah, definitely, yeah. And you have to remember this one too. Joel Greenblatt. Joel Greenblatt was very famous for the special situation too. So that might be another special situation, as described in his book from the 90s. You can be a stock picker genius too, where he
Hmm.
describes the special situations.
Well, cool. So what can you tell us a little bit more about what special situations mean for people who might not be familiar?
Yes, definitely. So companies will either divest a company or spin off a company. So, of course, you have Stellantis. It seems Stellantis is evil, from my understanding, they're combining from how you described it.
Yeah, they merged Fiat Chrysler and Peugeot like a couple of years ago.
Yeah, so that would be a special situation. And then the most recent one that me and you did was Bam and Brookfield. Another one
Hmm.
that just came up was Kellogg spelling off their brands into two separate companies, one for snacks and one for the legacy too.
Ah, okay, interesting. Yeah, so it sounds like if you're also interested in like kind of these special situations, and it sounds like a lot of them happen from special events going on with certain companies, like whether they're spinning off a company or they're merging with other companies. Like it sounds like there's like potential good investment opportunities there if you're aware, like how we know Monish Pabrai long ago had bought Fiat Chrysler, and then they spun out Ferrari, and Ferrari ended up being a great company, but Monish kind of kicked himself for not holding on to Ferrari because he wasn't really thinking it through maybe at that time. But yeah, like interesting how we can kind of pay attention and see if there's something worthwhile, especially when there are spin-off companies. Sometimes when a company is spun off, they are doing that because that company is really strong and they have to be able to manage their own balance sheet and have a good financial foundation. So if some spin-offs are good companies, like that also might be, it sounds like a special situation to look into.
Yeah, another special situation that I can think of too off the top of my head would be Johnson Johnson spinning off Kev,
Oh
and
yeah.
that Kev got included in the S&P 500. So if you buy the S&P, you technically own that company now too.
And what's that company about?
Like Band-Aids.
Oh, okay.
It's all the medical supplies from Johnson and Johnson into a different company.
Oh, okay. All right. Well, it's good to know. I mean, to if you're interested in the kind of medical equipment and supplies of like Johnson and Johnson, I guess separating out like the Band-Aid producer part and the other stuff I'm sure J&J does. I guess it could be interesting to see, how the legacy stock compares with the spin-off one.
Oh, yeah, definitely, yeah. And the other one that comes to mind would be like GE and GE Health. But
Mhm.
GE Health has IPO'd and received a skyrocket. But GE has, I'm assuming it's gone either up or sideways.
Mhm. And what's the spin-off? Is that like their financial division or something else?
No, no, it's the healthcare division.
Oh, healthcare. Sorry. I think I misheard
Yeah,
you. Okay.
yeah, it's the healthcare division. So like think like medical units and stuff like that. It's
Oh
done
yeah.
extremely well.
Yeah, I'm sure they're really needed. Like I can imagine, if they maybe make X-ray machines or MRI machines, like I'm sure GE is involved in the big industrial production of stuff like that.
Oh yeah, definitely. And another fun fact is too, like Warren Buffett has invested in the space of medical devices, given the fact with the I forget what it was. Oh, he owns a dialysis company too, so he has played in this field too with the medical devices.
Okay. And like chances are some of that will be more important, I think, in the coming years as more baby boomers enter retirement and live longer, and probably a lot of people will be needing more medical devices in their everyday healthcare. So could be an interesting place to also look into. But yeah, so it sounds like, we kind of talked about a little bit of Joel Greenblatt. I'm not as super familiar, but we, could, look into it more and see if there's some things that appeal to us. Like I'm just looking real quick on this site called Hedge Follow, and I see that some of the Gotham portfolio's top holdings include like the SPY, that ETF, and another one called G-SPY Title ETF. And he's also got 1.69% of Apple, and then also 1.5% of Snowflake and 1.39% of Microsoft. So as you said, he's got heavy tech concentration, and in addition to the overall market ETF. So one of the takeaways I'm sensing from Joel Greenblatt is that if you're an everyday investor, maybe stick to something that you feel like you're comfortable understanding. Like if you feel like you understand Apple and Microsoft products enough, and maybe those could be potential opportunities in, whenever you think they're a good value in the stock market. And also, if you're not sure, if you want the comfort of more diversification, some of the S&P 500 index fund, or maybe even Gotham's index fund, like in the S&P 500, maybe those could be potential investments by themselves. Like you don't even have to do that much work if you trust how Joel Greenblatt invests. Like, you think his Gotham ETF makes sense, then that could be a possibility for some people, right?
Oh yeah, definitely. Yeah, the expense ratio for the Gotham's ETFs, what I've seen, it will probably be like 1%, 1.2% grand total. They actually beat last year,
Oh,
but the fee would get you about if you take away the fee, they beat about 0.4% for the SPY, I think. And then for the 1,000 value one, I think they underperformed the SPY a little bit.
hmm yeah. I think like value stocks in general have been like as a whole, they've probably been a little bit still beaten down. Like they're kind of probably not as keeping up in the market. And also, let's not forget how the S&P 500 is probably mainly being upheld by the big tech stalwarts like Apple and Amazon and Google. Like if mainly the S&P 500 is being carried by the best companies, everybody else is probably kind of just kind of barely getting by, I'm guessing. So it kind of is interesting to kind of think about when you really look more carefully into what's in an index fund, of which stocks are really performing well. And I'm sure if people do that work, they can see, which stocks maybe are, they've been performing well lately this year, but are they setting themselves up to perform well next year? It's hard to say unless you've really done your homework. So like that's one of my takeaways from kind of looking at some of that still, is like you have to make sure you do as much research as you can. And it sounds like that's what you do. You look carefully into all of this.
Oh yeah, I somewhat do. I somewhat look carefully in all of this. Also this one too. I would recommend you audience read the small book that the little book that beats the market too. He does talk about it talks about this very, very specific study that has been forgotten a lot of the times. If you look now compared to, I think it's still up there, but the equal weighted S&P index has performed slash outperformed the actual index. He
Hmm
argues for the equal weighted index due to the fact of weightings and stuff like that, and the smaller companies actually pay more specific, like more specific part of the portfolio than just having it be carried by tech
Yeah.
or the
hmm
Magnificent Seven as they've been deemed now.
Magnificent Seven.
Yeah, that's what I'm getting from
Uh,
YouTube slash stuff. They kind of just deemed it that.
that's funny. Yeah, because I guess like the fangum is like hard to say anymore. Maybe like people don't call it that anymore. But yeah, like that's good to know. Well, I mean, I appreciate that you mentioned that because it'd been a really long time since I'd read Joel Greenblatt's book. And I think there's a lot of resources that people can check into that Joel Greenblatt has put on his website and also in his books. So I think people should definitely look into it more if they're interested in learning about Joel Greenblatt, because he is a pretty successful investor, right? I mean, it's not like he hasn't done well. I think he's one of the more successful investors around.
Yeah, I think Gotham Capital has annualized / like the max return from like the inception. I was over like 1,000%, and
Wow.
that was
Well,
with on leverage too.
but is
Um,
that cumulative or annualized?
yeah, cumulative. That's the cumulative return.
Yeah, yeah. Okay.
I think they annualized like 13.
Okay, yeah, but that's still pretty great. If any super investor can get above 10%, like that's pretty impressive because, in general, most normal people should only hope to get a normal 7 to 10% out of the stock market in a given year. And some years, like this year, like the market was beaten down last year, so it roared back. I think it's up like 15% or something, the S&P 500 this year. So it's done better, but it's not normal for us to expect to get 15% returns every year. So if you see really good professional investors even getting north of 10% consistently every year, that's pretty good. So there definitely is something worthwhile to what Joel Greenblatt's doing, right?
Oh yeah, definitely, yeah, and definitely the audience should check out the Valleys Investors Club. It is 4 months behind,
Mm-hmm.
but it is still good just to generate ideas. And on top of that too, you can really just type in like the Valley Investors Club. There is now a guy that just goes on the website and just reads the ideas and just records himself reading the ideas.
Oh, really? Oh, that's kind of neat. So if someone wants to check that out, like they can do that. But yeah, it's good to also get ideas from that place. I've heard good things about it.
Yeah, definitely, yeah.
Cool. Well, thanks, Gabe. I appreciate all your insights about Joel Greenblatt and helping us learn more about what there's going on with Gotham Asset Management and this investing strategy. And I really appreciate your time and hope we talk
Oh yeah,
again soon.
definitely. Oh yeah, definitely.
All right, till next time. Bye.